We have so much to get to today. Let's start with pro trader Joe Tigay of Equity Armor Investments. Joe, inflation at the producer level is falling, and Oracle is giving a big lift to AI tech stocks. What's your take?
Yeah, so the market's been waiting on this data to give us a clue what the Fed's looking at in terms of inflation. The jobs numbers have been softer. The worry was the inflation data is not going to be coming in enough to allow the Fed to cut. It seems like the inflation data is going to be sufficient to see a Fed cut. Now we're going to be waiting for that statement that they're going to give us next week, Angie, which maybe will tell us how many more cuts are coming down the line. We'll see if it's a dovish cut or a hawkish cut, if there is such a thing, maybe some language saying we're still going to be careful about this inflation, even though recent inflation data has been good. And that's not the only thing moving the markets, Angie. Of course, there's also been some really positive earnings news out there. The narrative of this AI story continues to be out there. Maybe it's growing a new leg for this rally, and it's in moving away from the chips into some of these data centers and some of this cloud services. So it's another aspect to watch and a new exciting aspect to watch.
People often wonder why the stock market is at record levels when the economy is slowing down. Is the key that the stock market is not the economy?
Oh, absolutely. The stock market's not the economy, and increasingly we're seeing a little bit of a divergence in what's going on. So the soft labor market is why the Fed is looking at cutting. The Fed's looking at lowering rates because the economy is slowing down. Now, there are a lot of tech stocks that really like that, but that doesn't necessarily mean that the economy is super strong. And at the end of the day, though, Angie, if there is more slowdowns in jobs growth, if there is a further slowdown in the economy, you will see this show up in the stock market. So we're not quite at that spot yet. I'm watching the VIX closely. As you know, I watch the VIX every single day as a former VIX options market maker. We're sub 15 in the VIX. It's a very low level for volatility. We're in a very volatile month of September. We're not getting any volatility. So the chance of a snapback, a dose of reality is absolutely there. We have to remain cautious, even though the market's at all-time highs. Everything seems great right now. It's not necessarily going to stay true forever.
Thank you, Joe. We will be watching.
Thanks, everyone.